Federal Reserve. Sounds boring until you realize it affects your mortgage, credit cards, savings account, investment account, as well as Bitcoin. So today, let's break down who the Fed is, how the Fed chair gets picked, how many people make the decision, and whether the president can fire Fed chair. And why do the markets react every time the Fed speaks? The Federal Reserve is the central bank of United States. It's not the normal bank like you and I go and open a checking account in. It's the bank for the banking system. The Fed helps manage monetary policy, supervises some banks, supports financial system, and influences interest rates. The Federal Reserve System has three main parts: the Board of Governors in Washington, D.C., 12 regional Federal Reserve banks, and FOMC. When people say the Fed, they usually mean the decision makers. These governors are nominated by the president and confirmed by the Senate. Fed serves for 14 long years. That is designed so that they are independent and stay away from short-term politics. FOMC is the group that actually makes big interest rates as well as monetary policy decisions. The FOMC has 12 voting members. So when the markets say the Fed decided, it means FOMC voted. The Fed's job is not to make the stock market go up, but its official job is dual mandate. This means two goals: maximum employment, stable prices. Stable prices means controlled inflation. The Fed says its long-run inflation goal is 2%. So when the inflation is too high, the Fed raises the interest rates or keep the interest rates high already. So when the job market is weakening, then Fed reduces the interest rates to support the economy. So the Fed is always balancing two risks: the inflation getting too hot and the economy getting too cold. The Fed directly does not set your mortgage rate, credit card rate, or stock market, but it influences the price of money. When the Fed raises interest rates, borrowing becomes more expensive. That means mortgages can become more expensive, car loans become more expensive, business loans become more expensive, credit cards become more expensive. And when money becomes more expensive, people and companies spend less. That can slow the economy and bring the inflation down. When the Fed cuts the rate, borrowing becomes cheaper. That can support businesses, spending, stock market, and even the riskier assets like Bitcoin and Ethereum. So the Fed doesn't control everything, but it controls the price of money. And the price of money affects everything. The Fed chair is not elected by voters. Fed chair is nominated by the President of the United States and must be confirmed by the Senate. So the Fed serves for 4 years, and after they're done, they continue being a governor if the 14-year term is not expired. So this is important because somebody's term as a chair may end, but they are still on the board as a governor. The chair is powerful because they lead the board, speak for the Fed, guide communications, and usually chairs the FOMC as well. The president usually nominates the Fed chair, but does not control the interest rates. Now the big question is, can the president fire Fed chair? The Federal Reserve says that the governors cannot be removed for their policy views. So under the Federal Reserve Act, the governors of the board serve 14-year term unless removed by president for cause. So the president cannot just say, I don't like your rate decision, you're fired. So the legal details of removing the chair or governor is very complicated and can end up in court. So the Fed was designed to have independence and make unpopular decisions. So like raising the rates to fight inflation without being controlled by short-term political pressure. Fed independence matters because inflation decisions should not be made like election decisions. This is why the markets react so much to the Fed. Higher interest rates can pressure stocks, crypto, housing, bonds. Gold can also react to the Fed because gold is sensitive to inflation expectations as well as trust in currencies. And Bitcoin and other riskier assets are also affected by interest rates. So the Fed is not just a boring government institution. It is one of the most important forces in the economy. So once you understand the Fed, you will understand why Bitcoin, stocks, housing, gold moves before even the economy feels different. Thank you for watching. Please like, share, and subscribe if you want to see more videos.